Hey, what's up everyone? Trader Tim from EminiMind. Today's actually Sunday, the 17th of September. I just wanted to do a little trade recap slash market analysis here as we go into the Fed meeting week. Been a pretty slow start to the month of September. Kind of expected that, but maybe a little bit slower than I even expected. Been a really like for the whole month so far. I've had a couple of 1 minute high-low bar, low-high bar trades, very few retracements, just a couple of retracements, and then a 15-minute Friday we had a nice 15-minute go for 20 points, but not a whole lot of really 15 minutes going for 20 points. So far this month. So Wednesday we'll have the Fed meeting in the afternoon. But I wanted to start on the weekly chart and just kind of show the relative to where we're at, how close we are to all-time highs. The other thing I wanted to point out is from a trend line perspective. We kind of have this uptrend line for the year so far. I don't think anybody thought we'd be up 30 some odd percent to at least to start the year. And you can see the trend line from the lows of the end of last year where most folks ditched everything down at lows. So moral here is that for your long-term retirement accounts, just continuing to plug away, not really trying to overly trade those accounts is actually quite a good strategy. Whereas in your brokerage account or if you have another retirement account that you're trading in, just something to separate your trading capital from your longer term investment capital. Because what can end up happening, let's say you got a small IRA and you're going to start trading in it because just buying mutual funds is boring, and the 8% or 10% a year average doesn't sound very sexy. You end up selling and getting scared out of positions, down here at the end of 2022, and then just sitting in cash, and you're really not making anything in the retirement accounts for as far as cash is concerned. If you have like a Discover savings account or some of these online savings accounts, currently you can get about 4.5% just for a straight up savings account, but you're really not doing anything in your retirement account. So then that can end up sort of weighing in on your trading decisions as you try to pick the tops and bottoms, and maybe you end up let me go back a little bit here to like a monthly. You sell out on a double top like here, and then you sit, and the next year goes by and the market's running up, and you decide, oh, you know what, I missed this whole move. I'm not going to do that again, so I'm going to buy back in, and then the market rolls over, and then you sell out at the bottom, and it's just kind of this return cycle. So what I like to do is keep my retirement, my longer term account, just boring old buy and hold using, just Vanguard funds. You can use VUG, that's just the growth stock fund. VOO also tracks the S&P, and then VYM is a dividend yield fund. That one I use in my health savings account. So otherwise VUG and VOO are the two that I use. Mostly it's in VUG. I just use VOO as a way to differentiate for funds for a child. And so then I can just have all that money in one non-retirement account, separate from my retirement account, and kind of the VOO fund is just kind of earmarked for her, rather than doing like a 529 specific for school. So outside of the longer term investing stuff, what I wanted to highlight here is this uptrend line that we've kind of pulled back to in the last couple of weeks and have started kind of running up again. And if we go even further back, these two lines are really marking the most recent swing high and swing low. And the reason this is not technically the most recent swing low at the moment, as far as the uptrend is concerned, is because we haven't made a new high yet. And so this is the last low point prior to making breaking the prior swing high. So when this low was put in, this was the prior swing high. When this is broken, then this becomes the most recent swing low. Before this one, it was back here. And so you can use that same approach for identifying when the swing high and swing low is moving and changing up to the next one on an intraday, on like the 1 minute chart or even the 512 tick chart. So that's a super good skill to have, being able to identify the swing highs and swing lows, and not just picking the most recent dip is certainly one to keep your eye on, just because it kind of lines up with this trend line here. But this is really the most recent swing low that kind of kicked off the uptrend. And then up here is that swing high. If we go to the retracements on a daily, we can see a couple of retracement longs here, both taking us up to like this 4,600 area. So this first one, well, the big one down here is the extension, the high to high. And then we zoom in a little bit more. We broke the opposing short here, like so. That's 61.8, pulled back to the 50%. And then this week, we pulled back on Friday right to this 4,500. And so both of these 50% have targets at 4,600. We'll see what happens coming out of the Fed meeting announcement. Going into the fall, we should have a lot more volatility and a lot more bigger ranges on the day. We're starting to see a little bit of that, just a couple of days here in September. But as you've heard me talk about in prior videos, getting through this Fed meeting announcement is big, because then we can really get heavier into trading in the fall. So I don't really feel bad for not being super active the first couple weeks of September, because I kind of planned for the second half of August and the first part of September to be a little bit slower. So that's what we're looking at going into this week. Unfilled gaps, we don't really have a ton. A couple below us here when we gapped up, and then Friday we gapped down, and so we have this one from Thursday up at 45.59 a quarter. So what those help us with is, let's say we gap up tomorrow. Just right now we're up a couple of points. If we gap up tomorrow and we're close to this 45.02, it's very likely that we can come down and fill that and watch that 45.02 as a potential bounce point. And if we start running up and continue going up, then this 45.59 a quarter can kind of act as a magnet and pull the market to that point. And then there you can look for a possible reversal. So when you're coming into like the prior day's high-low close, or one of these unfilled gaps, which would be a prior day's close, just not always the most recent, like yesterday's close, those are all places to look for, reversal bars, those hammers, inverted hammers, high tick, low tick of the day, halfway back points, because now you have other things lining up with the 50% retracement, with that hammer, inverted hammer, and that more people being active at those points is really helpful for getting the trade to move really quickly. So that's all I got for you this evening. We will be doing the live trading session Tuesday, even though usually Tuesday and Wednesday are pretty slow until the meeting announcement. Then it's all fireworks, and market goes kind of crazy for a little while. And then Thursday is kind of the day where we want to be paying attention. I don't trade on Wednesday, the Fed meeting announcement. Most of you all know that, because even if you pick the right direction and get in the trade just ahead of the Fed meeting announcement, it's so easy to just get kicked out right after the announcement. You go long, and then market shakes you out to the downside, and then 5 minutes later it's up 20 points or 40 points, and you're not in the trade. So it's nice to kind of have that planned break every 6 weeks, where Wednesday morning I don't have to trade, and I go ride my bike and just do other things. So when you plan those breaks throughout the year, it makes it much more sustainable to kind of do this for now it's been 16 years, 15, 16 years. I mean, it's been a long time since I've been doing this, and just like a pro athlete or any athlete might kind of schedule an off season and breaks, I like to do that throughout the year with some of these little days, like the Wednesday Fed meeting announcement, and things like that. So hope you have a great week of trading. If you have questions, you can drop them in the comments below or pop over to the Discord. Hope you have a great week. We'll talk to you soon.